Hey everyone, my name's Wei. In this video, I will talk about wash sell rule for stocks. Understanding this rule can help you avoid tax issues with IRS because this rule was established specifically to prevent investors from cheating and claiming deductions on capital losses. Let's start with the definition. Under wash sell rule, an investor cannot claim a loss on the sale of security if the security is repurchased or a substantially identical security is purchased within 30 days of the sale. This applies to both 30 days before and 30 days after the sale. Let's look at an example. In 2018, Bill bought 100 shares of Apple stock at $280 per share. By December of the same year, Apple's stock fell to $250 per share. Bill sold all the shares to realize $3,000 of loss. That is $30 per share of loss. The very next day, Apple's share fell to $240. Thinking this is the bottom, Bill bought 100 shares of Apple. Under the wash sell rule, Bill cannot claim the $3,000 capital loss deduction because he repurchased the identical security within 30 days. Instead, the loss is carried over to adjust the cost basis. So the cost per share becomes $270 per share and the total cost becomes $27,000. If Bill had not bought back the shares within 30 days, he would have been able to claim the $3,000 capital loss. Keep in mind, wash sell rule only applies to selling securities for capital loss. If you sell a stock for a profit and buy it right back, you still owe taxes on the gain. Now let's take a look at all the trade combinations that trigger wash sell rule for stock. The first one, buy stock then sell at a loss and within 30 days you buy the shares back. This is the case of our earlier example. Now you can also trigger wash sell rule if you buy stock, then sell at a loss and then buy call option for the same stock within 30 days. This is because owning call option is considered substantially identical to owning stock. In fact, selling put option deep in the money may be considered substantially identical as well, but this may be a gray area. If you sell stock short, then buy to cover at a loss. No matter what you do, as long as it relates to the same ticker, wash sell rule will get triggered. The safest way to avoid wash sell rule is to avoid doing anything with the stock for 30 days after the sale. But if you really like the stock and don't want to stay on the sideline for 30 days, you may consider buying another stock that has strong correlation to the stock of interest. Wait 30 days, then sell the substitute stock and buy back the original stock of interest. Hopefully by now you have a better understanding of how wash sell rule affects stocks. Thank you for watching.